Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for analyzing and identifying digital asset and blockchain opportunities for Arca's funds. Based on our research and market events over the past week, here's some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys, welcome back to another week in the crypto market, and we're officially well into Q2 now. The big news of this week is that we finally have a ceasefire with Iran after the last 5 or so weeks of fighting. There are more details to come on that, but the whole market, including crypto and the global economy, is holding their breath for that. Charles Schwab announced that they are going to be offering crypto trading very soon on their platform to select users. And Morgan Stanley also launched their Bitcoin ETF this morning. The thought is that Morgan Stanley has a much larger client base than some of the other ETF issuers in the past, and that this could potentially drive some serious inflows into Bitcoin. But I got some more tokens to talk to you about, so we will dive right in. First up, I'm going to talk about Drift Protocol. This technically actually happened last Wednesday, but it was kind of such a big deal. I was like, I have to give you guys like the lowdown on what happened here. So last week there was a $285 million hack on Drift Protocol. They are a very big perpetual futures protocol on Solana, and it is just rocking the industry currently. So the hack itself, I know I come in here and I talk about hacks all the time. This one was actually very, very sophisticated. And again, really a exploit of a very high profile project on Solana. So, and for a very large amount as well, is why I'm kind of flagging this one. But so the hack itself actually took like 12 minutes to execute, but it was supposedly laid out over a 6-month period. Again, get ready. This is like a crazy story. So hackers apparently posed as members of a quantitative trading company, and they approached the Drift team members at industry conferences. This was how they kind of got their foot in the door. But they were like they ended up building these relationships with these team members or contributors to Drift. And over time, they were sending them things like code repositories and documentations and links and saying, hey, will you check this out and give me feedback before I like integrate with Drift? And of course, a lot of these people unknowingly were like, yeah, of course, like this makes sense. We've met these people in person. They're legitimate. And again, this turned out to not in fact be the case. Supposedly a lot of what was sent to these team members had malicious software in them. And this allowed them to kind of gain access to their devices. So from there, the next kind of thing that they did is that, the hack also exploited a feature on Solana, which it's called, sorry, I can't remember the name of it, nonsense, but it basically allows users to pre-authorize transaction signing. And so what that means is that when you're sending something, usually the wallet that you're using will pop up and say, are you sure you want to sign this? Are you sure you want to send this? Sign the transaction. And you sign it by putting in your cryptographic hash, your private keys, and then it says, okay, it's good to go, like it's been signed. And so Solana offers a feature where you can pre-sign transactions. So what happened was that using these malicious code things that they kind of inserted onto the devices for these Drift team members, they were able to, while the Drift team members were going about their day, they were getting pop-ups like, can you sign this? Can you sign that? And they unknowingly pre-signed a bunch of authorizations for transactions. So then the next thing that happened as well, again, this was kind of like a lot of little things, but there was an update to Drift governance that actually lowered the number of required signers to required signers. So usually a lot of protocols have any major changes you want to make or anything you want to do, they usually require something like 5 or more people to sign and agree to it, right? Which makes sense. It's a security feature, but they had actually reduced that threshold to 2. So they only needed 2 signers. And then the third thing that happened is that they removed what was called the governance time lock requirement. So the time lock essentially allowed a cool down period if there was like a big change or withdrawal in the protocol. So people could intervene, especially if assets in a large amount were withdrawn. The team member could kind of like pause the protocol and say, okay, like let's assess and make sure this is actually a legitimate transaction. So having all of these pieces put together, Oh, and sorry, the last piece. Finally, these hackers, they created a fake token and a fake trading market weeks before the attack to make the market appear legitimate. So what then happened on the actual attacks, the hackers swapped this fake token for a legitimate collateral inside the Drift protocol, and then withdrew and because they dumped in this like fake collateral, the system said, oh, it's real, it's worth this much, even though, again, this was all kind of like made up through a trading market. The hackers were then able to swap this collateral in the Drift protocol and withdraw assets immediately as the time lock delay was as they got rid of the time lock delay, and with only 2 pre-authorized signed transactions. And then immediately they bridged the assets over to Ethereum and started selling them. So like I said, this is like a crazy sophisticated hack because it happened really quick, but they clearly had been laying the groundwork for it for months, several months. There was clearly some manipulation in terms of what was going on with team members, et cetera. This is something that has been pretty unheard of, but always good to keep aware of. But in totality, Drift lost about 57% of its TVL in this hack, and their token price is down 36% since last week. We will have to see if Drift ever recovers from this. Okay, next up, I'm going to talk about, no, that was not the right one. Okay, next up, I'm going to talk about Ethena. So on Monday, Ethena, who is the issuer of one of the largest yield-bearing stablecoins, announced that they're going to be changing the backing reserves for their USDe stablecoin. So if you're not familiar with Ethena, they have a yield-bearing stablecoin or an algorithmic stablecoin, whatever you want to call it. It's not actually backed one for one like dollars like USDT and USDC are. What Ethena does is that it essentially tokenizes, you can think of it, the basis trade, which is essentially where you hold an asset long and you go short it via futures. And then you collect the funding, which is a yield that is from the funding between those two. Ethena doesn't use leverage. Everything's backed one-to-one, which is why they hadn't had a ton of issues. The biggest issue, though, they are having is that this strategy works great in a bull market, right? When your asset price is going up, and so shorting is lucrative. But in a market like this, you're not really going to make a lot of money on this type of strategy. And so Ethena has really suffered. Their stablecoin has come down a lot in AUM since its peak of 15 billion. It's down to 5.8 billion right now. And also their revenue has also taken a bit of a plunge. So they did announce on Monday, though, that they're going to be expanding their areas to include over-collateralized institutional lending, high-quality liquid RWAs beyond T-bills, equity and commodity basis exposure, and prime lending. Obviously, this can encompass a ton of different strategies. It's unclear how much of it they will actually explain or disclose to the public, especially since in some cases, some of the institutional lending stuff is a bit more opaque. But we're going to have to see. A lot of people are definitely criticizing and saying Ethena is going to essentially be running, a hedge fund strategy, masquerading as this stable coin. But I think it depends that, users need to be aware of kind of what they're investing in, what they're doing. So like I mentioned, their revenue is really taken a hit in the last year. The protocol at one point was generating like $200 million annually in revenue, and they now generate about less than 900K annually, just based on the last 30 days of revenue. So we'll see if this has an impact for Ethena. Their token price on ENA is down 2.5% this week. Okay, now last up we have Lighter Protocol. So Lighter is another perpetual futures exchange. They announced a big partnership this past week with Telegram. So Lighter, Telegram, if you're not familiar, the messaging app, they also have their own blockchain. So Lighter, they offer a front-end exchange, and they also have like a back-end integration capability for other products to kind of plug in and use their perpetual futures market. So very similar to Hyperliquid's model. That feature on Hyperliquid's is called builder codes, if you're trying to draw the parallel there. The partnership is going to mean that they're going to be able to support that the Telegram app is going to be able to support perpetual futures trading natively within their wallet app. And again, these integrations have been super popular. The big one we saw actually recently was Phantom Wallet. They integrated Hyperliquid for the same purpose, so they could offer perps trading within the wallet. So Lighter, however, doesn't charge fees for this fees to its basic users. and they earn most of their revenue off the premium subscription model. They also aren't charging fees to users using their protocol through the Telegram wallet. So as a result, this protocol actually trails substantially in revenue. They've generated about 45 million in cumulative revenue since launching last fall. But despite this, Lighter does have a buyback token program. They've bought back about 4% of their circulating supply of their lit tokens since launch. The market head did like this. Lighter is up 16% this week. All right, guys, I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.